Okay, so you want to start investing, but you don't know where to start. You don't know how to start. So stop doing whatever you're doing right now, because we are about to walk you through how to begin building wealth. New year, new you. Money expert Robyn Thompson is going to walk us through with Investing 101. Great to have you on the show today. I love this topic.
Oh, well, so great to be here, and so do I.
I know. Okay, so let's get to it. Investing can feel daunting. It can feel overwhelming if you've never done it before. So what do we need to know before we jump in?
The first thing is to understand, are you in a good place to start investing? And what that means is, what is your current financial footing? First place to look at, what is your credit card debt? So we know what's going to happen right now. We're going to start to get those bills. We're going to open them up. We're going to see where we are. 18%, 19% interest rates, really high. So it's unlikely you're going to receive a return in the market continuously year after year around 19%. So you need to pay down some of the credit card first. You take a look at some emergency savings to make sure you have 3 to 6 months in emergency savings in your accounts. So you want to make sure that before you start putting all your money into the market, that you're on a sound financial footing.
Okay, so we've done that, and now we're solid, so now we want to start investing. So if I'm somebody who's never invested before, how much money do I need to start?
You'd be surprised. It's actually very little. You could start with as little as $25 a month, right? So the technology or the
automation.
The automation of it, or even just if you want to become an investor, open a brokerage account, transfer money from your checking account into your brokerage account, invest
when you say
in
that,
ETF.
So when you say brokerage account, you could just do that by yourself?
Yeah, you can open up a brokerage account online, you can start investing, you can start buying a mutual fund or an ETF. So the thing is that, so you could do that, it's very transactional, but you have to understand, what are you doing? So before you start looking at what is a stock, what is a mutual fund, what is an exchange traded fund, start to understand what exactly is the market and how do I make money doing this? And it really is just an exchange of people who are buying and selling. So somebody feels like a company is going to go up in value, so they buy it. Somebody feels that the company is going to go down in value, so they sell it. So how do you make money at it? And then it's about the risk. People are always afraid of the risk of investing.
Yeah.
So you have to understand before you go and you buy an all equity ETF or very high risk, is that something that you can manage in your life? People always say risk tolerance, but I look at it as loss tolerance. Like, how much can you actually afford to lose if things go wrong?
Think about your gut and what you're feeling like in terms of like how much you can take. Let's talk about the different ways of investing. You mentioned a stock, so that's one. You also talked about an ETF. For people who are unfamiliar with an ETF, what's an ETF?
So an exchange-traded fund essentially is it's almost like a wrapper, and inside there are things like stocks, bonds, equities. So it gives you a diversified way to invest in the market. So it gives you some balance. So instead of going out and trying to say, I'm going to try to pick the best 10 stocks or 15 stocks, invest 10 or 5 bonds, you're buying a structure that has those inside of it. And you can actually say, I want to be conservative, which means you have the least amount of growth potential, so you're on the safer side, or you can go all the way up to aggressive growth, which has the highest amount of equity. So if you think about it, it's like a one-stop solution for having diversification in a portfolio at a relatively low cost. It is the most efficient, effective way to start investing your money in a small amount over time, and it's going to give you the diversification that you need.
And let's talk about the importance of time. How important is it to be patient?
Timing is everything in the market, and that's not to mean to try to time the ins and outs of the market. It's about understanding that investing is a long-term game. It is not a short-term endeavor. So if you look at, say, investing, say $500 a month, and you invest that at a conservative rate of return of about 6%, you do that every month for the next 30 years, that's going to accumulate to about over $500,000.
I mean, think about that for a second. $500 a month.
For 30 years at 6%
years.
compounded return. Imagine if you did $1,000 a month. So the earlier you start, the smaller amounts lead to more money over time. So it's the small, consistent actions you take that's going to build your wealth.
Also, and there's those calculators you can go online to show yourself if you invest $100 a month at what percentage, like the return rate, you can see how much money you could be making over the long game.
And that's where I suggest you start. So, and you can look at that and say, okay, so if I want a 4% rate of return because I know that's the least amount of risk, then look at that. Or you can say, okay, what's a 10 or 12% rate of return? You'll see that number start to multiply into really large numbers. But if you are younger and you're starting and you have a long time horizon, you can afford to take a bit more risk if you have that capacity. If you're older, the risk becomes that you didn't take enough risk when you were younger, and you might run out of money. So people are always afraid to invest. But if your money is not keeping up with the rate of inflation, it is eroding itself every single day. So what happens is that later in life, when you need that money and you don't have the tolerance to take the risk, you're now in the position of, do I take more risk because I need more money, but I don't have the capacity? Or do you take the risk earlier on when you can measure it slowly over time and kind of put your feet into different buckets and pools of stocks and bonds and equities? And it is the place that you can grow wealth and protect your family and do all the things you want to do.
And leave money for your children, which often feels quite daunting where people sit where they are right now. I have so many more questions, but we're out of time today. You're going to have to come back because I really want to talk about the importance of compounding too. And obviously, you can reach out to any financial advisor and do your research. Money expert Robyn Thompson, great to have you on as always.
So great to be here.
When we come back.
If you liked that video, make sure to subscribe to the Your Morning YouTube feed where you can find all kinds of new content posted every weekday morning.